and every one of you. Okay, so my name is Rohit Golani, and I'm a chartered accountant by profession. And on behalf of Optotax, I welcome each and every one of you to this concluding session of assessment series. So professionals have already started gathering for today's very hot topic. And I've already mentioned that the enthusiasm of our professionals has been really, really commendable. They're always keen to learn and improve each and every time. But let's wait for our other professionals to join as well, because we at Optotax are a family of professionals from all over country who are coming together for mutual empowerment and benefit. So Mageji is saying, is my voice perfectly audible? Because Mageji is saying that my voice is low. So can other people please tell me if I'm perfectly audible to each and every one of you? Okay. Okay, thank you so much. Good evening, Manojji. So last two sessions have been really gaining traction from all the professionals in the community. And it's not me saying so, it's your feedback and support that's walking the talk. So thank you so much. Yes, good evening, Aishwariji. I hope each and every one of you are doing good. And now before passing this session to our esteemed faculty for today, I hope all of you are living a safe and healthy life. Global cues are really vague due to concerns of new corona variant. So I urge all the professionals to keep themselves and their families safe, regularly sanitize your hands and follow social distancing norms. Those are really must. And so to kick off today's webinar, which is brought to you by Optotax, which might already be used by many of our professionals, but those who are new to family, let me brief you about it. Optotax is India's #1 and biggest GST platform. We are a technology and knowledge platform. And in our journey, we have always tried to make the GST compliance experience seamless and hassle-free. We are now a family of 50,000 plus tax professionals who trust Optotax for their 1 million plus clients, and it's counting. It has been engineered for your empowerment and benefit. So I urge all of you to please give it a try at least once, as it is totally free and efficient. To all the participants who have missed last two episodes of assessment series, don't worry, we got your back. You can catch it on our Optotax YouTube channel. It will be easily available for your knowledge and insight. And other than that, you'll also find other contents which are very much knowledgeable. If you really like the content, please give it a thumbs up and also press the bell icon, because I know you don't want to miss our regular and knowledgeable updates. And now coming back to today's topic, which always has been a major arena of practice for many professionals. It is assessment procedures. And today we are going to learn about income scaping assessment in faceless era. It is really a hot topic in current scenario. We'll be covering all the aspects, right from issuance of notice to each and every facet of face reassessment in faceless era. And this will be narrated to you in the easiest possible way by our faculty for today, CA Manish Dafria ji. So how do I brief about him? Because I don't think he's dependent on any introduction, but let me take a moment to introduce all of you. CA Manish Dafria ji is a managing partner of chartered accountancy firm VK Dafria & Co. His area of specialization is international taxation, corporate tax consultancy, and startup advisory. He is also involved with academic and is usually a visiting faculty at IIM Indore since last 20 years. He is a regular speaker in national and international conferences organized by Institute of Chartered Accountants of India, and has presented papers on different topics like emerging trends in anti-evasion, corporate mergers and amalgamation, LLP, charitable trust, transfer pricing, international tax treaties. He has been nominated by Ministry of Finance, Government of India to the Regional Direct Advisory Committee Indore region for the year 2011 till 13. He is a regular invitee by Income Tax Department to deliver lectures for their officers training and public awareness programs as well. So we are really lucky to be sharing this virtual stage with such a knowledgeable and dynamic personality like Manish sir. We welcome you from core of our heart, and thank you for being part of this virtual stage with us. Thank you so much. And I guess I won't take any much time of our attendees and you, and I'll straightforward head it over to you for your kind deliberation. So over to you, sir. Stage is yours. you can go ahead.
Okay. Yeah. Thank you, Rohit. Just a quick feedback. My voice is clear.
Yes, sir, 2 minutes clear, and we will be
Fine.
receiving a response. Yes.
Okay. Okay. Very warm good evening to everybody. Warm in the sense this might be chilly in number of parts of the country, but from in central India where I am sitting, it is still good warm weather. We are here to discuss something about this whole taxation aspect, about reassessment, section 147. Before I start my deliberations, I think I must mention one thing. We all are living in an era of change, and the kind of change we have seen in probably last 3-4 years, that ferocity of changes is enormous. Probably none of the generations of humankind earlier must have seen the changes with such a kind of speed, and our profession is also not an exception. Change in the law, change in the way we do the business, change in the way we handle the client, we interact with the client. And probably one prominent example of the change is the seminar itself. Okay. We are not meeting on the platform of any ICI branch, but we are meeting on the platform of one of the leading technology provider of the country. So far the CA profession is concerned, Optotax. Okay. And I'm really glad to see Optotax is not only a technology provider, but it is actually a knowledge provider, a knowledge solution distributor kind of company. And our profession is actually a knowledge profession. So my real hats off to Optotax for arranging these kind of seminars. You are not only helping the profession with respect to your technology tools, but you are really helping profession in keeping themselves updated, upgrading the knowledge. Okay. Now coming about to the topic, the change. Actually, the topic is all coming from various kind of changes. The faceless assessment scheme, we all have experienced, we all have faced issues in last 1 or 2 years. Now this whole reassessment procedure, not only the procedural aspect has changed because of this whole faceless regime, but more importantly, the legal, the conceptual aspect of this reassessment 147 itself has got changed. So in today's seminar, we shall be talking more about this new framework which has been developed with respect to this reassessment 147. So far as this faceless aspect is concerned, probably the way faceless is being handled for all other kind of assessments, more or less similarly it is going to be applicable with respect to the assessment also. But then there are some very conceptual fundamental changes related with the law of reassessment as such under the Indian Income Tax Act. So what all those changes, how that law is going to unfold, that is all what we will be discussing in this particular seminar. I've been told many seniors are also there with us in this particular seminar. Probably for all those seniors, this is a time actually to learn, unlearn, and then relearn. We all are in the process of unlearning age-old concepts which we have learned in so many years of practice, unlearning them, and then probably learning the new concepts. This is what the CA profession is all about. So what are these new concepts, new issues, new regime with respect to the assessment? This is what we will be discussing in this particular seminar. If you can just give me a minute, I would be sharing my screen and then we will be starting our discussion. Okay. So now from 1st of April 2021 onwards, this whole concept of reassessment under income tax has undergone a complete change. As I was saying, all those age-old concepts we used to attach with 147 reassessment, all those concepts are no more valid in this new era from 1/4/2021. Just to give you an example, the moment anybody talked about a reassessment, and the first word which comes to the mind is always reasons to believe, section 147. Since our CA final days till and then during the course of all my taxation practice, we have always been told that the basic crux of this 147 reassessment is a reason to believe. And then one stroke of amendment, that whole concept of reason to believe is no more relevant. Whole legal edifice built into this onto this reason to believe. Lots and lots of court decisions, jurisprudence developed over the period. Now everything has become meaningless so far as this new regime of reassessment is concerned, which is applicable from 1st of April 21. So three aspects of this whole reassessment, this change scenario, is what we will be discussing. Issuance of notice with respect to this reassessment, and then the crux, the basic concept which has got changed. Earlier it used to be reason to believe, now it will be information which suggests. So what exactly is this particular change? This is what we will be discussing. There is something called inquiry before the issuance of notice. A new procedural angle has been introduced with respect to that reassessment. That is what we will be discussing. And a very, very important change is with respect to the time period, how old they can go back, how far in the past income tax department can go back with respect to this reassessment. A very important change, and I'm sure where there is going to be a whole lot of litigation in years to come. So that whole time period requirement related with this reassessment, issuance of notice, this is all what we will be discussing as a part of this today's discussion. Okay. So let's start by generating some ideas about the basics of the new scheme before we go into the legal nitty-gritty of each and every aspect. Some basics of this new scheme, what is going to be changed. As I mentioned, for many of us, this is a process of unlearning and a relearning. First of all, I needed to delete some of my older concepts, and then I need to recreate the newer concepts. Okay, like what is happening in this technology era. We used to work in a particular manner. We used to work in within the four corners of our office. Now all these technology companies like Optotax has changing the way we are working. May not be need of having expensive softwares in our offices, may not be the need of maintaining detailed data in our offices. Technology companies are there which are providing all these solutions to us. So the whole way of working is getting changed. We need to unlearn, first of all, what we have learned earlier, and then we need to cope up with this whole new way of doing work. So similarly, with respect to this section 147, what has actually been changed? Basics of this new scheme. Let's try to generate some idea on this, and then we will go into the legal nitty-gritty of this. Now, the very first thing, as I have mentioned, reasons to believe, that concept is now dead. No more, absolutely no relevance. So reams of papers generated by the tribunals and high courts and Supreme Court on defining what is reason to believe, everything has now become meaningless. Now this reassessment, that is assessment under section 147, is possible only in a case information with the assessing officer which suggests that income chargeable to tax has escaped assessment. So from reason to believe, to information which suggests. We will try to decipher it. What exactly is this meaning of information which suggests? We will try to generate some idea on this. Okay. In fact, I've been told in earlier two sessions, Optotax has given us an updation about, say, other aspects of assessment. First was this section 142 to 144. So scrutiny assessment is what has already been covered. Best judgment assessment is which has already been covered. And now today's seminar is actually completing that trilogy, reassessment, scrutiny assessment, best judgment assessment, and then this reassessment, but the reassessment in its new avatar. So the first requirement for this 147 reassessment is no more reason to believe, but there has to be information which suggests. Meaning thereby, now onwards, any reassessment procedure has to be very, very information based. It cannot be a fishing process kind of thing. I have got some vague reasons, and based on which I, as an assessing officer, has initiated the reassessment process. That is not going to happen. It has to be a pure information based process now onwards. So the basic requirement is information which suggests income chargeable to tax has escaped assessment. Another very, very important change. Now, search and survey assessments are also to be done under section 147 now. We used to have separate sections earlier, 153A, 153B, 153C for all these search and survey assessment. Now, all those sections are no more relevant. Any search conducted on or after 1/4/21, the assessment would be under section 147 only. No separate assessment sections for search and survey. So search and survey assessment are also to be done under section 147. Now, with respect to search and survey, law generates a very important assumption. They say a deeming provision they have created, and then they are saying that for normal reassessment, AO needs to have AO needs to have information which suggests that income has escaped assessment. In search and survey cases, no specific information is needed. Search and survey cases shall automatically be deemed to be the cases where AO is having information which suggests that income chargeable to tax has escaped assessment. So search and survey assessment with this deeming fiction are shall now always be the part of this 147 reassessment. Then the time limit. And this time limit is now going to be a major change. Okay, probably going to change the whole way of say we handle the assessment cases, we handle a client's case, how long income tax department can now reopen my cases. So the basic idea now is this: reassessment can be done only up to 3 years. And in certain cases, they can go from 3 to 10 years period. This 3 to 10 years period requirement is where I see a whole lot of complications generating going forward, a whole lot of litigations coming into going forward, and where we would be requiring more and more clarities coming to us through case laws and everything. But right now, the basic law is this: normal case, reassessment can be done up to 3 years. In certain special cases, they can go for 3 to 10 years also. Okay. Some messages coming in chat box about voice quality. Is there any problem from my side?
No, sir, I don't guess. I guess there is no problem from your side.
Okay. Okay. Thank you. Fine. So this is what is this basics of this new scheme. Each of these aspects we will be now trying to decipher in a bit detail. Okay. The very first thing. No more reasons to believe. And then I would be emphasizing this particular aspect again and again and again. And I'm sure a number of seniors present in the seminar would share the same kind of feeling, we have spent our good amount of professional life in order to understand all these concepts. What exactly is the meaning of reasons to believe? Host of court decisions and everything we try to understand, and now all those understanding is of no meaning actually, because law has changed the basic premise of this reassessment itself. They say now the reassessment can be done only in case AO is having information which suggests that income chargeable to tax has escaped assessment. Okay, one very important point, in fact, I would like to make here: the way this whole income tax assessment concepts are changing, the way department is moving towards is more and more information based working, more and more data based working. Okay, and here is the point where the structured methodology of working from our professional side also comes into picture. In a department is going to work in a very structured methodical manner, no more generalized notices kind of thing. They are getting whole lot of data, they are getting whole lot of information coming to them through various huge sources. This whole annual information statement we must have started seeing, and it is a same mine of whole lot of information about assessee. So that whole availability of information is affecting each and every aspect of working of department. So with respect to the assessment also, they have made it very clear that it should be based on information which suggests that income chargeable to tax has escaped assessment. More an objective criteria, more a tangible criteria. Reason to believe used to be an abstract criteria kind of thing. Now they are coming to more tangible criteria. So what do they mean? Information which suggests that income chargeable to tax has escaped assessment. Law is giving two clarifications on this. First, they are saying that any information flagged in the case of the assessee for the relevant assessment year in accordance with the risk management strategy formulated by the board from time to time. Let's try to see the kind of language now getting into the legal literature. Okay, information flagged. This is a term first time we are hearing with respect to any law of taxation. Risk management strategy. This used to be a management jargon earlier. Now this management jargon has become part of law, has got a legal sanctity. They will be formulating some kind of risk management strategy. Based on this, some information would be flagged with respect to the assessee, and that will be the basis of that reassessment. Okay, so the idea is something like this. Number of says a good amount of clarity is still required on all these issues, but the idea basically is this, that this is going to be an information based exercise. Department has got good amount of data, good amount of information. That information they would be matching with the details filed by the assessee in the income tax return. And if their systems generates a flag based on their risk management strategy, a flag is generated that there is some mismatch in the information given by the assessee and the information already available with the department. So that will be the basis of the assessment. Information flagged in the case of the assessee for the relevant assessment year, there would be a flagging of information. Okay, technology people can guide us more on this particular aspect, but what we all can understand, the whole process of flagging would preceded by a detailed amount of data matching at the department level. A good amount of, say, computerization they have already done. So there is going to be a good amount of data matching. Based on that data matching, they will be trying to find out cases of mismatch, and based on those data mismatch, a flagging would be done, and that information flagged in the case of an assessee would be the basis of a reassessment. So as I have mentioned, this is going to be much more tangible criteria as compared to an abstract idea of reason to believe. This will be a much more tangible criteria, information flagged in the case of an assessee. And then second idea about this information which suggests they have generated, that is CAG objections. Any audit objection generated would be again a basis Any audit objection generated with respect to the assessee, any final objection raised by CAG. So CAG objections would be another basis for the purpose for the purpose of this whole reassessment exercise. Okay, so probably CAG objections would not be a very frequent situation kind of thing. What is going to be a more frequent situation is this data mismatch. So in fact, what I feel, because of this whole new way of handling the cases at the department level, information data is getting such a prominent position in overall working of income tax department, then absolute care is required from the side of our professionals, even at the return filing stage itself. Okay, whatever is the information with respect to the assessee thrown in AIS or available from all other sources, we need to be very, very meticulous about submitting all these informations in the ITR filing itself. They might be saying ITR filing is going to be a very, very easy process, but I am sure that with all these information available with the income tax department and the detailed matching of that information with the return filing by the assessee, return filing is going to be a very meticulous process. Every assessee would be well advised to seek a professional help in order to ensure no information remain hidden kind of thing. All the details, all the necessary information is submitted. The information in the return matches with the data which is already available with the income tax department. If there is any mismatch, there will be a flagging, and this flagging will ultimately lead to a reassessment. So information which suggests that income chargeable to tax has escaped assessment. Now, this is what is the basic fundamental change from reason to believe to proper data-based, information-based assessment regime is where this whole new reassessment is leading to. As I have already mentioned, this whole reassessment exercise would be there with respect to this whole 147 assessment exercise would be there with respect to search and seizure cases also. In case of search and survey cases, there is no need of any separate information kind of thing. Search and survey cases will always be treated as assessing officer is having information suggesting income chargeable to tax as escaped assessment. So this whole criteria of information with the assessing officer would be relevant only in the case of a normal reassessment. A search and survey assessment, this criteria would not of any relevance. Now, along with this change in the basic premise of 147 reassessment, what they have done is a great change with respect to the procedural aspect of this whole reassessment. Also, how that whole reassessment procedure would flow, that flow has now been changed. The flow has now been defined in the act itself. So another aspect of this whole change is conducting inquiry, providing opportunities before issuance of the notice under section 147. We all must be familiar with this aspect, that any 147 reassessment procedure starts with a notice under section 148. Now in the act, there is one more section, 148 capital A. 147 assessment is preceded by 148 issuance of notice. 148 issuance of notice is further preceded by section 148A. Some procedure they need to perform under section 148A before issuing the notice under section 148 itself. Okay. Again, seniors and other professionals who are practicing to this whole reassessment area already, they must be able to recall Supreme Court in its landmark judgment in the case of GK and a drive shop has laid down a procedure which was required to be followed by the department with respect to any reassessment procedure, where Supreme Court had mentioned that whatever are your reasons to believe, these reasons need to be communicated submitted to the assessee, then assessee may raise an objection to those reasons to believe. These objections are required to be disposed of by the assessing officer, and then only reassessment procedure is to be completed. This is what a kind of procedure which had been laid down by the Supreme Court by virtue of that GK and drive shaft case. And because it was an order of a Supreme Court, department was bound to follow that particular process and in all the reassessments they were doing. Now, what has happened? More or less that kind of procedure which Supreme Court has laid down through GK and drive shaft, they have brought down that particular process. They have brought that particular process in the law itself by virtue of this introduction of new section 148A. The procedural flow would be something like this. There would be first of all, there would be a 148A process. Once that 148A process gets completed, then there will be a notice under section 148. And once that 148 notice has been issued, then there will be an assessment under section 147. So 147 preceded by 148. 148 is further preceded by 148A. Okay. Now, there are 4 aspects of this whole 148A procedure. As we have already discussed this aspect, that there the very basic requirement of this 147 assessment is information which suggests that income chargeable to tax has escaped assessment. Now 148A is saying that if there is any such information, AO is required to conduct an inquiry with respect to this particular information. So probably the situation is something like this, that department's system have generated a flag with respect to one particular assessee. A flag has been generated by the department system. The ITR of my client has been filed. Data with respect to this assessee is a good amount of data is already available with the income tax department. So some matching procedure they have done with respect to the data already with them and the data filed in this ITR. And based on their risk management strategy, department's system have flagged some particular cases. Okay, in case of this particular assessee, there seems to be some mismatch kind of thing. We have got the information that this assessee has sold off this particular piece of property, but there is no information regarding capital gains in the return of this particular assessee. So there seems to be some kind of mismatch. A flag would be generated. This flag would then be sent. This flag would start getting flashed in the system of that assessing officer who is having a jurisdiction with that particular assessee. On that particular pen, wherever the jurisdiction is there, that flag would start getting flashed. So based on that flag, assessing officer would come to know that these many assessees are there in my jurisdiction with respect to whom some flag has been generated by the income tax department system. These are the cases where a reassessment might be required. But before AO jumps directly to this reassessment procedure, he may like to get some more confirmation. This whole flagging activity has been done through an automated mode only. Systems have generated all these flags. So there might be some cases where there might be a false flagging kind of thing. There may not be any cause of concern. There may not be any income skipping assessment actually, but still the flag has been generated. So AO may like to do some kind of inquiry. That inquiry power has been given under section 148A. So the very first power which has been given to AO under section 148A is to conduct an inquiry. He may, not necessarily, the wordings which they are using exactly is if required. So if AO feels any further inquiry is necessary, he may do that particular inquiry. For doing that particular inquiry, he would be required to obtain prior approval of the specified authority, which is going to be principal CIT in a majority of cases. So with the prior approval of PCIT, AO would be conducting an inquiry. AO may, if required, conduct an inquiry with respect to that information which has got flagged. Okay, so practically speaking, at AO's level, this is going to be the starting point. At the whole department level as a whole, the starting point is that flagging, which has been done somewhere in the data center of the income tax department. The flag has been generated. Now, from the AO's perspective, once the flag has come to his system, he might be inclined to do some inquiry with respect to that particular information. Okay. Then, after doing that inquiry, or he may not feel like doing any further inquiry, then he will be issuing a show cause notice. So from assessee's perspective, this whole reassessment procedure would start when he will get a show cause notice under section 148A. Today, for me, that whole process starts when I get the notice under section 148 for filing of my return for that particular year. Now, under the new regime, first of all, I will be getting a notice, a show cause notice under section 148A. Okay. Even before issuance of that notice under section 148 for filing of return, they will be issuing a show cause notice. So till now, the procedure, the assessment procedure has not actually started. The assessment procedure would get kicked in once that 148 notice will be issued. This is prior to issuance of that 148 notice. So AO would be issuing a show cause notice to the assessee, asking me why the assessment should not be done based on that information which suggests that income chargeable to tax escape assessment. that show cause notice would be issued to me. Like Supreme Court had mentioned in GK and Drive Shop, the reasons to believe are required to be shared with the assessee. There, Supreme Court had mentioned once assessee complies with 148 notice, then these reasons are to be shared. Now the law is saying even before the issuance of 148 notice, we will be giving you the reasons. We will be telling you what is the information available with us based on which we feel that there is an escapement of income. So that show cause notice would be given. Again, the show cause notice would be issued with the prior approval of specified authority, which is going to be principal CIT in number of cases. Okay. Minimum 7 days time they have to give me for replying to that show cause, maximum 30 days. Of course, an adjournment is possible by filing an application. This time period may be extended. Most of us might have realized this thing in faceless regime. They are not giving extension beyond 15 days. Extension adjournment has to be obtained through system itself, through the portal itself, and in the date window which is available for that adjournment, that doesn't allow me to stretch it beyond 15 days. So though the law is silent on this particular part, but procedurally maximum 15 days adjournment may be demanded with respect to reply to that particular show cause notice, where they would be asking me why the reassessment should not be done. Fine. Based on that show cause notice, the information which they have given to me, we would be required to submit our detailed response to it. We would be required to submit all the data which is available to us, how that information is relevant or not relevant in my case. If that information is relevant, how I have already submitted all those details by way of my ITR, and all those information we would be required to submit by way of reply to that show cause notice. Now, from assessee, from AO's perspective, the third requirement is this: to consider the reply of the assessee. Whatever reply I have furnished, that would be considered. Based on all these things, then AO would be finally passing an order whether or not it is a fit case to be taken up for the reassessment process or not. Okay. Before actual commencement of reassessment procedure, this is what is going to happen with respect to 148A. Pass the order as to whether or not it is a fit case to issue a notice under section 148. Okay. Now, legal requirement is this: order is to be passed on the basis of material available on the record, including the reply of the assessee. Fine. And I always feel all these kind of languages in the law becomes a very fertile ground for taking a legal recourse subsequently. The order passed by AO under section 148A must show very clearly that it has been passed on the basis of all the material on record, including the reply of the assessee. What we call in the legal manner, it should be a speaking order. In a summary manner, if simply AO has passed the order that 148 notice is required to be issued, that order can be challenged on that particular aspect itself, because law is very, very clear. Order is to be passed on the basis of material available on record, including reply of the assessee. Okay, I must mention this thing here again. Whatever is written in the law, every single word has actually got its own relevance. Nothing is written there in a superficial manner. When the law has mentioned it very, very clearly that 148 order is to be passed based on material available on record, then that order of 148A must show that it has been passed in this particular manner. If it is not a speaking order, has been passed in a specific manner, has been passed in a summary manner kind of thing, then this particular order can be challenged on this particular aspect itself, that it is not as per the requirement of section. It is not as per the scheme of the section. Okay. So what they have mentioned, order is to be passed and then it is required to be passed within a period of 1 month from the end of the month in which that reply has been submitted. That 1 month period would be available to the income tax department to take a final call whether to go ahead with this reassessment procedure or not. Okay, so this is what is this basic requirement of that 148A, the procedural requirement. But at the same time, that procedural requirement has got lot many clues for we professional about how to challenge that whole procedure at a later point of time, whether it meticulously that procedure in the letter and spirit it had been followed or not. That is something very, very important aspect of this whole requirement. Okay. Fine. So we have got one particular query. Section 148A reply can be extended with requested by the assessee during non-available on this time. Okay. So I'm not getting it very clearly, Venkateshji. If you can just rephrase your query. And then Anubhav Jain Sahab also wants to say something. Could you type your point, Anubhavji? Yeah, if you can just say push it through chat, it would be easier for me to reply to the. Okay, we can take up the queries even later on also. Fine. So this is what is this basic requirement of section 148. Hey, the step-by-step procedure which needs to be followed by the AO meticulously. If there is any deficiency at the AO's level, this would be a good ground for me to challenge that whole reassessment procedure at a later point of time. So practically speaking, once this whole procedure would be in place, and then suppose we got an order under section 147 with respect to my assessee, the first thing I would like to do is to take that particular order in my hand and examine it with a magnifying glass with respect to compliance of section 148A requirement, whether 148, the basic requirement itself, has been complied with or not. That will be my starting point of analyzing that whole 147 order, because there are host of decisions where courts have said that any procedural non-compliance at the AO's level is solid ground for rejecting that whole process, that whole particular order itself. Okay, now say one or two observations with respect to this whole 148A process. First of all, this whole 148A is not applicable in search cases. Okay, in search cases, there is no show cause notice for issuance of a 148 notice kind of thing. No, but it is applicable with respect to the survey cases. So we will be having three types of assessment now under section 147. One would be based on search, second would be based on survey, and third, what we call is the normal reassessment. For search and survey, both the cases, there is no separate information which is required. This will be a deemed case of AO having the information for reassessment. For normal reassessment, there has to be an information available with the AO suggesting escapement of income. Then only that reassessment can be done. Then with respect to search case, even 148A is also not required. For survey and normal reassessment, 148A show cause and all those procedures would be applicable. Now, coming to another legal aspect of this whole 148A, this 148A order per se has not been made an appealable order under the Income Tax Act. That section 246A appealable order before CIT appeal, that has not been amended. So against that 148A order, I cannot exercise the right of appeal before CIT appeal. Probably a writ jurisdiction would be available. The option of filing writ with High Court may be explored at this particular stage if required. In the earlier regime, we used to file an appeal before the High Court the moment my objections have been rejected by the Income Tax Department. Then, in a number of cases, we file writ before High Court. In some cases, High Courts have rejected the writ, saying that you go to the normal, you avail the alternative remedy. With respect to 148A order, what is going to be the position needs to be explored, needs to be seen further. As per the Income Tax Act, against 148A order, you cannot file an appeal. So if you feel that 148A procedure has not been done properly, you may not be in the position to challenge 148A order, but against the final assessment order, when you will be filing an appeal, this might be a very good argument to take that 148A compliance has not been done properly. Okay. Fine. We have one particular query coming from Anubhav Jain sir. What if the notice is served under section 148A to the assessee who do not have any income source and they neither filed their return from the PAN was created? What type of inquiry it would be considered? Fine. See, the law is not giving us any specific idea of a particular case. When assessee is not having any PAN, what will be the position? But still, that 148A process has been designed to take care of these aspects also. Some information has been flagged with respect to some assessee. That assessee may not have filed any return. AO would be issuing a show cause to that particular assessee even before starting the assessment procedure. 148A show cause would be given to that non-filer assessee. Based on that show cause, the reply may be submitted to the Income Tax Department that, sir, you are saying this land has been sold off and no capital gain has been offered. I have got all these proofs mentioning that this agricultural land is a rural agricultural land situated beyond 8 kilometers from the city limit of Mumbai or Bangalore or Hyderabad or something, used for agricultural purposes, no taxable income. I do not have any other income. So all these non-PAN cases, non-filer cases, all would be taken care at the level of 148A itself. Fine. So I was on the point of this 148A order itself. Say, for example, taking this example further, this assessee has sold off his rural agriculture land, no other income, so not filed return of income also. Department got the information about this immovable property transaction. The information has been flagged. AO has issued a show cause under section 148A. I have submitted reply that this is the assessee not having any other income. This land transaction is also rural agriculture land. I'm producing all the documents to prove that this is a rural agriculture land. Still, department has gone ahead with 148. Ideally, they should have dropped that 148 reassessment based on my reply itself. But they have gone ahead they have decided to continue with this reassessment procedure. And they issued an order under section 148A that we are continuing with the reassessment procedure. I cannot appeal against that particular order. At this stage, there is no right of appeal available to me under the Income Tax Act. I may think of a 226 writ before High Court, 226 under of Constitution, that's a separate matter. But under the Income Tax Act, they have not provided me a right of appeal with respect to 148A order. So they issued me a 148 notice, I submitted return, they did the assessment, and then ultimately they treated this agricultural land sale as a taxable transaction. When I will be filing an appeal against that final assessment order, in that particular appeal, it would be a good ground to take for me that 148A order itself was not a reasoned order. It was not based on merits. It was without considering the submission made by the assessee. That kind of argument may be taken in that appeal at a later point of time. Okay, number of queries are coming. I think let me finish this whole discussion, then probably I'll be able to take all these queries in a sequential manner. That would be a more helpful way of doing it. So this is what is this whole idea of 148A inquiry before issuance of the notice. Okay. Then once this whole 148A business is over, then comes 148 issuance of the notice where income has escaped assessment. So information has been flagged. AO might have made certain inquiries. Then AO has issued a show cause to the assessee. Assessee submitted his reply. AO considered that particular reply, and after considering that reply, AO passed an order under section 148A where they have decided that we are going ahead with the reassessment. Now the focus shifts to 148. Okay. Now before starting, before making that assessment under section 147, they will be issuing a notice like they do even today in the say earlier regime also. The same procedure were there. The notice would be issued asking the assessee to file a return of the income for that particular year. Now the only change is this notice is required to be accompanied with 148A order. Whatever order they have passed under section 148A, that order would also be issued along with that particular notice. Again, a prior approval of specified authority would be required even at this point of time also. Yeah, Ramesh Ahujaji, we will be coming to that particular aspect, and this represented by an asset that is going to be most important aspect of this whole new regime of reassessment. We'll be coming to it. Okay, so notice under section 148, the only change is this: it has to be along with 148A order. Now the time limit for the issuance of the notice, and this is what is the main aspect of this whole discussion. Apart from that whole 148A procedural change and that reasons to believe, from reasons to believe to information with the assessing officer, the conceptual change, the third and probably the most important operational change which has been introduced by this whole new mechanism of reassessment is this time limit. Now, what is going to be the time limit for issuance of the notice? The normal time limit has now been curtailed to 3 years only. Earlier, it used to be 4 years, 6 years, and in certain cases, even 16 years also. Now they are talking about 3 years time period. Okay, so no 148 notice can be issued after 3 years from the end of the relevant assessment year. Okay, so any notice under section on or after 1421 has to comply with this particular, with all these requirements of the new system. So for assessment year 1718 till assessment year 1718, now that issuance of notice is not possible. Normally they can issue a notice for AY 1819, 1920, and 2021. Okay, for AY 1718 and earlier assessment years, normally, generally, they will not be in a position to issue any reassessment notice. What has been done by the assessee in these earlier years, that has been done. No further question would be asked generally. Though there is one very important exception which is subsequent to it. Now, then earlier what used to be 4 years and 6 years, now generally, normally it is 3 years, but then they have gone ahead by saying that notice can be issued for the period prior to 3 years, but up to 10 years. Earlier 3 years, generally they can issue the notice, and then 3 to 10 years also they can issue the notice. The notice under section 148 may be issued for 3 years to 10 years period, subject to compliance, subject to fulfillment of two conditions. And these are two very, very important conditions. Needs to be read with a microscopic lens. A whole lot of controversy is going to be there based on this particular requirement. For 3 to 10 years, the notice can be issued only when AO has in his possession books of accounts or other documents or evidences which reveal that income chargeable to tax represented in the form of asset has escaped assessment, and it is amount is likely to be 50 lakhs rupees or more. For 3 to 10 years, the notice can be issued only when the income escaping assessment is represented in the form of an asset, and it is likely to be 50 lakhs rupees or more. That whole idea of income represented by an asset has been first time introduced in the Income Tax Act under section 153A, search assessment. The normal time period of such assessment was 6 years, and then they have said for 6 to 10 years also that the such assessment can be done in case of income represented by an asset. So they have introduced that particular concept, income represented by an asset. That's a very important concept. Not much of the clarity available on it, needs to be tested, and it will be tested, I am very, very sure, at the highest level of judiciary. None less than Supreme Court would be required to come out with a clarity about this particular phraseology, with this particular terminology. Income represented in the form of an asset. The idea is this. First 3 years, they can issue the notice without any further problem, and we all are comfortable with it. Whatever may be the situation, generally, normally, for 3 years, the notice can be issued. No monetary requirement, no specific nature of income, nothing. 3 to 10 years. The very first requirement, what kind of income has escaped assessment? First time law is talking about kind of income. Okay. Otherwise, income is an income. Every income falls into the one single bucket of getting taxed. Now they are saying the quality of income, the type of income, what exactly is the income which we are saying that this has escaped assessment. Now the law is saying income has represented in the form of an asset. Now, what exactly it will mean, as I have said, I may not be a proper authority to comment on this. None less than Supreme Court would be required to engage itself to generate an interpretation around this particular concept. But still, we can generate some clarities on this. Income represented in the form of an asset. Say, for example, assessee has purchased some asset 5 years back, 6 years back. Okay, for the sake of example, let's take the value of that particular asset as 1 CR, 1 crore worth of asset has been purchased. The information has been flagged by the income tax department database that this asset purchase has not been reflected. This doesn't match with the profile of the assessee. So they want to do a reassessment with respect to that 1 crore land value, that 1 crore asset value. More than 3 years have already been expired. Whether they can go for this reassessment, I feel yes. This is a case where the income escaping assessment is represented in the form of an asset. It is getting represented by an asset, which is probably an undisclosed asset, the sources of which are not clear. But now let me change the example a little bit. 5 years back, there was a marriage in the family of the assessee. And income tax department gets to know that around 1 crore of rupees expenditure has been done in that particular marriage. And then they have seen the returns of the assessee and everything. The profile doesn't match. The income of the assessee doesn't match with respect to that 1 crore expenditure on the marriage. Now they want to do a reassessment with respect to sources of that particular expenditure. Now, we all know there is the section 69C in the Income Tax Act, which says that any expenditure, sources of which are unexplained, can be treated as taxable income of the assessee. But now the point is this, whether they can do a reassessment beyond 3 years with respect to that particular expenditure. Whether the expenditure situation can be equated with the situation contemplated by law, that this is represented in the form of an asset. My humble submission, no. The expenditure is something different. Act gives us a further clarity. They mentions that asset shall include immovable property, being land or building or both, shares, securities, loans, advances, deposits, and bank account. So if there is an expenditure which is liable to be taxed under section 69C, whether that can be treated as income represented by an asset, my simple submission is no. So even if some assessee has done a huge expenditure somewhere in say prior to 3 years period, that expenditure sources may not be explainable, but probably under the new regime that situation would be out of the clutches of taxation department. This is not a case represented in the form of an asset. Okay. Similarly, say for example, there are a more common case of unsecured loan more than 3 years old. Now, whether those unsecured loans, section 69 can be applied, section 68 can be applied for the period prior to 3 years old under the new regime. Whether the income which is represented by loan can be treated as income represented in the form of asset. I have my own doubts. Just to make it clear, and in one of our search cases, we are arguing on this particular point where there was a case of bogus share capital somewhere in a period of 8 years. Search cases, as per the old procedure, between 6 to 10 years period, they can assess only when again income is represented by an asset. So there was this case of bogus share capital. We are already arguing on this particular point that bogus share capital beyond a 6 years period cannot be taxed under the old 153A regime, because this is not an income represented by an asset. 68 is there, but 68 is talking about unexplained credit. With all my accounting knowledge under my command, I can always say anything which is related with credit is definitely not represented by an asset. I can tell you based on my experience, there is very absolute lack of clarity at the department level with respect to this whole idea of represented in the form of an asset, which is already there with respect to the search cases. Now this is going to be applicable at a larger scale, in mass kind of thing. This would be applicable. Every case they would try to cover, even beyond 3 years, they would try to cover that, okay, this is a case where it is represented in the form of an asset. And as a professional, it would be a very good, it will be a real test of our professional skill to argue that no, the income which you are trying to flag might be an income. I may not be in a position to explain it, but this is very clearly not an income represented in the form of an asset. So you cannot tax it now. Okay, this is going to be a very, very interesting area of say litigation practice of say legal issues. Because now this whole represented in the form of an asset is applicable en masse. Earlier it was limited to such cases. Now in every case, department would like to use this particular argument that, okay, this is a period 5 years back, but this is the income which is represented in the form of an asset, so we have a right to tax it even after 5 years. As a professional, we would be required to argue, no, sir, this is a case where the income is not represented in the form of an asset. Okay. And then another requirement is this: it should not only be in the form of an asset, but it should be, the amount should be 50 lakhs rupees or more. Okay. So I have purchased a piece of land, but the value was only 20 lakhs or only 30 lakhs of thing. Whether they can now go for the reassessment? No, because 50 lakhs threshold is also there. So probably all those 50C cases, my difference in the purchase price and the guideline value and the stamp duty valuation, if that difference itself is more than 50 lakhs of rupees, then probably that 10 years period would be available. But they want to issue a notice for period 5 years back, based on the stamp duty differentiation, and then the difference is less than 50 lakhs of rupees. Probably these cases would not get covered now under section 147. Okay, so most important aspect of this whole 147 from a practical operational point of view is this time limit for issuance of notice: 3 years general, 3 to 10 years only when these two conditions are getting fulfilled, represented in the form of an asset, and then amount is 50 lakhs or more. The only caveat is this, that the 3 years, 10 years time period would be excluding the 148A process. Okay. So in fact, that 3 years time period is required to be seen not with respect to 148 notice, but with respect to 148A show cause notice. If that 148A show cause has been issued within that particular 3 years time period, then this is a proper compliance with that time limit requirement. 148 notice might get issued after 3 years, but the show cause has been issued within that 3 years period. Even that would be a good enough compliance. Fine. So, friends, this is what exactly is this the new system, the new regime of reassessment under section 147. We have touched upon all these basic changes which have been introduced. As this is a new section, number of clarities would emerge with the passage of time. CBDT would come out with certain clarifications. Courts will start coming out with their own interpretation, and then only we will be able to get a further clarity on various nuances of this new particular regime. Fine. But as I have mentioned earlier also, this is an interesting time, the time of change. We all needed to learn how to cope with the change. And the most important part of this change, it is forcing us to unlearn and relearn. Okay, probably doing the practice through an outside a technology company like Optotax or something is also part of unlearning and relearning for most of us. But this is where the time is forcing us to move. This is where the technology is forcing us to move. So let's try to be a part of this particular change. The law is evolving, the law is changing, the conceptual changes there, the procedural changes there. It is time to keep ourselves updated, not only with the legal changes, but actually how the things are being done. This whole system-based working, computer-based working, all is now going to be a very, very important part of our whole professional life. Okay, so I think with this, I can sum up my discussion at this particular point of time. Certain queries are there. I think, Rohit, we can take up these queries.
Yes, sir. We can take up the queries. We have
Sure.
answers.
So let me start with this. Anubhav Jainji has asked about assessee need not filing is written. I think I have answered this. Okay, so Anubhavji is having a counterpoint. It should be served under section 142.2. So depending upon the time limit, if they go for this 142.2, they will be going for the normal time limit of 153A, completion of assessment. If they go for 148A, they get this 3 years time period. So time period would be a determining factor. If time period for normal assessment is there, definitely they will be going for 142.2. But if that normal assessment time period is already over, then probably matter would come to reassessment 148A. Okay. Assuming a company is not filing income tax returns for few years before the end of relevant assessment year, a company not filing income tax returns, first of all, the company is mandatorily required to file a return of income. What is the possibility for the company to file income tax returns for such years? In such cases of filing of ITR, is the whole income during the year is taxable without considering? Okay, I think not exactly relevant with our topic of discussion today, but I don't think you have got say any way of filing your past year's returns for which the time period is already expired, except by way of say filing an application to CBDT and taking their permission. Otherwise, once the time period is over, the returns filing is not required. Okay. Yogesh ji, can we request Faceless department to transfer our case to local AO for face-to-face assessment? As per the schemes of this Faceless assessment, it is not possible as of now. The scheme, they are thinking of say making some changes, some amendment to it. As of now, I don't think there is any option available to the assessee to choose your bench. I don't want to go to Faceless, I want to go to local AO. Scheme doesn't permit it. Okay. Ramesh Ahujaji, please elaborate escaped assessment represented by any asset. Suppose there is escapement, but there is no investment. What will happen in that case? I think I have covered that particular aspect, but for the benefit of everybody, so this is going to be the most crucial aspect of this whole reassessment. Okay. Please make ourselves absolutely familiar with this particular concept that after 3 years, they cannot issue the reassessment notice in a ziffy, in a normal manner. They have to prove that this is the income represented in the form of an asset. And in any case of this reassessment, which has done after that 3-year time period, this is going to be a most important point of arguing of a legal challenge to that assessment order. So as Ramesh ji has mentioned, that there is an escapement, but there is no investment. They cannot do the reassessment. I gave you the example of that marriage expenditure. Okay, 5 crores marriage expenditure, huge amount, no sources, not possible to explain. But still, this would be a time barring case. I would be arguing that particular situation based on technical grounds, time barring case. not on the merits, whether I'm in a position to explain that expenditure or not. That is not, there's no need to go into all those details. It's a time barring case. The law is saying beyond 3 years, it has to be income represented in the form of an asset, income represented in the form of loans, income represented in the form of share capital, income represented in the form of expenditure. All these income are different than the income represented in the form of asset. Beyond 3 years, sorry, the doors are closed for the department. Okay. Yeah, then Suresh Jain Saab is asking a question. Search has taken place in one firm. Unaccounted sales have been found with details. The assessee has received notice under section 148. My client has purchased my client has done unaccounted purchases with that particular firm. Actually, the assessee has purchased the goods on credit and paid the amount for purchase after selling the goods, whether total purchases from the firm. Okay. So again, probably not related with our today's discussion, but still say I can give you a very brief idea. For all these bogus purchases, we have got some very fantastic decisions. Schmidt P said from Gujarat High Court is what we use normally, which is saying that in case of bogus unaccounted purchases, the total income cannot be taxed. Only a GPE ratio can be taxed. Something around 8 to 12.5% is normally what high courts have settled for. A number of jurisdictional tribunal decisions are also there. So I'm sure if you will do some research, you will be able to find some decision from your own jurisdictional tribunal talking about this unaccounted purchases taxed only on GP basis. Okay, Rohit, I think a number of other queries are there, probably not related with our topic, but more related with other procedural aspects. Rectification request is rejected as the processing has been completed. Can I claim the balance TDS of FY 1920 in current FY 2021? I don't think I will be in a position to answer Sarita ji this thing. I don't involve much with the say return filing process. So probably somebody who handles this return filing in a more expert manner, they may give an answer. Okay. Ravi Kandanji, how about the existing cases, notices, scrutiny, etc. happened before faceless assessment era? Okay. Now, whatever is to be done, Ravi Kandanji, now whatever is to be done now, it will be in a faceless manner. Okay, the original assessment might have been done in the regular manner, but if the reassessment is to be done for the very same year, it has to be as per this new regime and under the faceless. So now there is no escapement from faceless. Even income escaping assessment cannot escape the faceless assessment. It has to be through faceless assessment only. Okay. So I think these are various kind of queries we are having. Rohit, over to you.
Okay. Thank you so much. Thank you so much, Manish ji. It was really an insightful session. It was full of learning, and obviously it was perfectly executed. As I can see that comments from our professionals are coming that they have really got something out of it. So I hope it will be helpful for each and every one of them in their regular day-to-day practices. And obviously I can see in comments that there are so many beneficiaries. And thank you so much for your love and support to all the professionals. And obviously we are ending with a good note that we get this chance to hear again from Manish sir on various topics to enlighten us with more of the aspects of faceless assessment and many more topics of income tax. Thank you so much for this intellectual session. We have really maintained 90 to 100% of attendance throughout the webinar. That's really commendable, professionals. Thank you so much. And to all the participants who missed today's webinar, they can find it on Optotax YouTube channel. It's available as per your convenience. So go and watch whenever you want. Thank you so much. Please stay connected. Keep using Optotax. Be safe. Adhere to social distancing. Bye-bye and good night to each and every one of you. Thank you, Manish, once again.
Thank you. Thank you.